I think the silver investors are, it tries your patience, especially with gold doing so well. A lot of silver does saying, what about me? But on this year, basically, silver has most of the time outperformed gold on a percentage base. What happens if the inflation psychology takes off again? And it's not only Guggenheim that decides silver is a good investment. BRICS are buying silver. The public is aware of silver. It's finally hitting the mainstream media, which I know is a question we'll get to later. But so that's what I'm going to say. I think the 2 or 3% that Peter outlines correct, but who gives a darn if the industrial demand's down 3% when the investment demand goes up by 400%.
The price of silver has seen a significant rise since the start of this year, now exceeding $31 per ounce. U.S. investment firm Bank of America Corporation predicts that the average silver price could reach $28.14 per ounce in 2024, with expectations for it to climb even higher to $35.38 per ounce in 2025. David Morgan is closely watching several bullish developments for silver, including a key monthly close in September, Russia's announced accumulation of silver, and the growing industrial demand for the metal. Morgan acknowledges that silver investors may feel frustrated, especially with gold's recent strong performance, but stresses the importance of patience. He notes that once silver breaks through the resistance zone between $31 and $33, this level will become support, potentially leading to a rapid upward movement, similar to what occurred in 2010 and 2011. Russia has shifted its precious metal strategy by adding silver to its state reserves alongside gold, platinum, and palladium, a move that could influence global markets as central banks reassess silver's value. Silver demand has surged in recent years while supply has struggled to keep pace. For 3 consecutive years, demand has exceeded supply, and the Silver Institute anticipates another market deficit in 2024. This shortfall is largely driven by rapidly increasing industrial demand, particularly from the solar energy sector. In 2023, the silver market recorded a structural deficit of 184.3 million ounces, with projections for an even larger shortfall of around 215 million ounces this year. If realized, this would mark the second largest silver market deficit ever recorded. David Morgan downplays concerns about a potential decline in industrial demand, noting that even if it decreases by 2 to 3%, a significant 400% rise in investment demand would more than offset it. He emphasizes that the surge in investment demand has a far greater impact on silver's price trajectory than any minor fluctuations in industrial usage. Let's get into the details. If this video is helpful, please like and subscribe. Currently, 11% of you are subscribed, and we're aiming for 1,000. Your support will make a big difference.
Silver's finally got back to, that level. And on a monthly close, that means more than just a day or a week. And what it really means is we finally, are building a new base to go through. It's similar to what happened with gold at the 2000 level. Kind of wallowed around there for a while. That became kind of a resistance area. And it took a while, but went through it, came back under it, went over, came back under it. And eventually it poked through, and now we're at, 2650 roughly. I think this 32, 3150, 32, 33 in that range. This is an art, not a science. People draw, resistance at different levels just based on how they look at the chart. But the point being is that once it gets above that resistance level, that will become support. And once that becomes support, the move up should go rather quickly like it did in, 2010, 2011, because there's very few overhead resistance. Buyers that are stale longs that bought it at, 35, 40, whatever it may be, that say, oh, I've broken even, I'm going to sell my, $35 silver. There's very few of those people around. So any new buying puts a lot more pressure to the upside. So I think it's very, very good. It's, I think the silver investors are, it tries your patience, especially with gold doing so well. A lot of silver does saying, what about me? But on this year, basically, silver has most of the time outperformed gold on a percentage base. All markets move at the margin. And the margin for silver is investment demand or monetary demand. And if you go back to 2020, we had a phenomena that's never existed before. In 2020, the amount of investment demand for silver was 530 million ounces. The normal 200 million ounces, which is kind of the average, was retail demand in 2020. Another 300 plus million ounces was from the ETPs or ETFs. I think, and I do not know, that Scott Maynard, probably from Guggenheim, their chief investment officer, who announced at Davos that silver was his number one pick that year, was probably instrumental in that much silver. But you got to think about that for a moment. We mine 850 million ounces of silver annually. 530 million ounces is more than half of what we mine. The total that we have for silver, counting recycling, which is round numbers, about 150 million ounces. So 850 and 150 is a billion ounces. Investment demand was over half the total silver annual supply. That could happen again. In fact, it actually could go beyond that. I know that sounds real bullish, and oh my goodness, David, you're Super Bowl again and all this stuff. But look, I'm based on facts. That happened in 2020. What happens if the inflation psychology takes off again? And it's not only Guggenheim that decides silver is a good investment. BRICS are buying silver. The public is aware of silver. It's finally hitting the mainstream media, which I know is a question we'll get to later. But so that's what I'm going to say. I think the 2 or 3% that Peter outlines correct, but who gives a darn if the industrial demand's down 3% when the investment demand goes up by 400%?
In today's world, as consumers seek straightforward investment solutions with reliable returns, passive investment strategies, especially through exchange-traded funds, ETFs, have gained considerable momentum. While physical gold and silver have long been cherished in India, the rising popularity of digital assets like gold and silver ETFs reflects a shift in investor preferences. These digital options offer the benefits of precious metals without the complexities of storage and security, making them an attractive choice for modern investors looking for convenience and diversification. David Morgan recalls receiving numerous inquiries about the potential launch of a silver ETF, and thanks to insights from the Silver Institute, he was aware it was in development. He points out that ETFs help mitigate risks associated with mining companies, such as jurisdictional challenges, legislative hurdles, and environmental regulations, which can complicate direct mining investments. By offering exposure to silver without these complexities, ETFs provide a simpler and lower-risk alternative for investors. Now, let's redirect our attention to a video.
One is that there are alternatives. So one of the biggest things that take place was the advent of the ETF. I mean, the gold ETF was one of the first. I remember when it came out, I was getting all kinds of emails, calls, whatever, saying, will there be a silver ETF? And of course, I had a tip from the Silver Institute that yes, there would be. And of course, there is. So first of all, Section 7 holder, a stockbroker, is not allowed to buy a commodity. Yet there's this demand. So what do? They, the powers that be, the financial markets, developed a stock that's a commodity. So that's the SLV and the spinoffs from their PSLV and others. So now you can be an equity investor and buy a commodity. So that's number one, because that took a lot of money that would have gone into a mining stock to the commodity itself. And there's less risk because with a mining company, you've got jurisdictional risk, you've got legislation, you've got EPA, you've got a lot of extra baggage, let's say, with that investment where a straight ETF mitigated it. That's number one. So there was a situation where now an equity investor could buy a commodity without any of the problems that you might encounter with the mining stuff. Secondly, these mining companies have, a lot of hurdles, and I just outlined some of them. But one of the biggest problems is knowing, if a stock's undervalued, fair valued, or not. And this is, mining stocks aren't all that hard to analyze, but the juniors are almost impossible to. Some of the junior producers are hard. So what I did when I started the Morgan Report, and this is not a shameless plug, it may sound that way, but after being beat up in the juniors when I was in my 20s, I took a deep breath and put off investing for a while and studied the market harder. And what I determined was you got to get the blue chips and you got to weight the portfolio. And that's what we've done. And that's what we featured the royalty companies pretty much from the get-go. And on that basis, the inflation problem, that's why we buy the metals, also pours over in some of the mining companies, but it really doesn't affect the royalty and the streamers. And because of that, our top 2 or 3 top tier, where I teach people to put big money in big companies, be safe, buy the blue chip, buy the best of the best, are making all-time new highs now, while these indexes are lagging. They will catch up. There will be a time to get in them. I'll probably be giving more and more phone calls to Peter as this market gets harder and harder because, in fact, I'll just say it publicly, I'm thinking of maybe doing some kind of joint effort with him because he's younger and got more juice and maybe he can ferret out some of these things. I'm a little older and not as zippy as I used to be, but there will come a time for them. But right now, as you've kind of rested during this market that's starting to heat up, the place to be is where I have basically indicated to my members where to keep their money. And again, this will shift, but that's the best I can do. I hope I explained it well, but just a lot of situations where a money manager doesn't want to have to think, oh, we want silver exposure, buy the SLV, and they put their mouth down and I don't have to worry about getting my report or Peter's or some other Wall Street report or whatever. They have to mess with that. So a lot of that money that would have gone to the miners just doesn't go in there anymore.
Silver's rise mirrors gold's upward trend, driven by strong buying interest ahead of key Indian festivals like Navratri. In addition to festive demand, escalating geopolitical tensions have further boosted silver's appeal as a safe haven asset. Heightened conflict in the Middle East, alongside concerns of a broader regional confrontation, has prompted investors to seek refuge in both gold and silver as hedges against uncertainty. Silver prices have surged over 35% this year and may continue to climb. Increasing global demand, especially from countries like Russia, could further fuel the metal's upward trajectory. With both gold and silver seeing strong gains, which metal do you think holds more upside potential in the near future? Drop your comments below and let us know what you think. If you found this video helpful, please like it and subscribe for more. We're grateful to have you with us on this journey.